The four biggest, I think that there's a missing letter in this beautiful graphic you have here. It'd be the four biggest threats. There's the four biggest threat is spoken. That's like somebody an ESL person. That's an English as a second language error. Um,
It's
four
hard to
biggest
find good
threats.
help, Dylan. You know, it's tough. You know, it's a struggle. It's okay
the,
though. It's all
the
right.
four biggest threat to the U.S. stock market. But yes, I'm at your service, and I've identified the threats, and I'm prepared to engage and discuss them at
You're
any
taking
time.
out the threats.
Yes.
There we go. We got live help to put
Look
it
at
in.
that.
All right, so we're gonna give you the top four. We're gonna start from the least of the threats. What's our first one here? The Trump wild card, tariffs, Fed, who knows? What do you mean by this, Dylan?
I just mean Trump has proven himself because he has no boundaries as an ever-present threat to the behavior of the financial markets because he's capable of holding a press conference at any time and saying, "Fire the Fed chief," ban ban steel from
the tariffs
outside
go
of
up
America.
100%.
150% tariffs on your mother, like whatever could be anything with this guy. And so I just think that unlike any other sort of historical situation politically, Trump uniquely represents. I think this is relatively low probability because I do think that even if Trump comes out with whatever wild commentary it may be, of which obviously there's an abundance, that the markets in relative is pretty desensitized to it compared to where it was in March or April of this year. You saw how quickly when he said there was the whole Fire Powell letter that happened in the past month or month and a half. I can't remember exactly. And we kind of had a sell off to the tariffs, which obviously sort of were a bad week. And then really it's a challenging couple of months or maybe a challenging month, I guess. So I do think that one of the threats to the market, still you have to consider that the president of the United States is unique in his willingness to offer a variety of comments that go direct to his views of what's right for the financial system as it relates to bank policy, rate policy, and tax policy in a way that is unlike any other president before. And I think it has to be on the list, although it's my number four. And again, I gave all my caveats.
And you think if we were doing this segment 3, 4, 5 months ago, you think this would be number one?
Of course. Yeah. I mean, 4 months ago, Trump would be the biggest threat to the market for sure.
So you think markets have digested this and have kind of priced in the Trump wild card, so to speak? Like this is this is kind of old news, so to speak.
Yeah, and also I just think people are more aware of the fact that even in the most extreme Trumpian commentary tends to get moderated substantially in terms of its actual policy implementation. Look no further than the tariff list on April 1st or whatever, April 2nd, whatever day that was, and then the actual tariff implementation that came through in August. And I think that the arc of that moderation is the reason why the Trump wild card has gone from 1 to 4 on my list.
Love it. I agree with you. So number 3, then you got hotter than expected PCE next week. You're starting to buy into this sort of thing?
I'm not buying into any of these things. I was told.
See, you should have flipped the script and you should have said the top 4 bullish things.
No. I am an obedient soldier of Tasty Nation.
Well, we appreciate it.
And I was asked to identify the 4 biggest risks to the stock market.
Okay.
Now, I assign relatively low probability to all of these risks because I am a Mike Butler supernova bull.
Yeah. Just smile and buy.
Okay.
All you got to do.
All right. So hotter than expected PC. Why do you think this is a problem? Oh, did we lose Dylan again?
But I think it's emblematic of the fact that, there's a level of comfort right now in the way the financial markets are priced, particularly the bond market, but also the stock market, that is relatively dismissive of any persistent inflation concerns.
No, I need it. I mean, the YouTube chat is saying that, anything you say sounds like a sonnet. It's just like beautiful and perfect. Okay. And so we wouldn't want to cut you off.
Let's not have the technology be a barrier to my poetry. I find it somewhat insulting. No, but I mean, again, all jokes aside, the market is comfortable that inflation is not an issue. The more that there's data that suggests that it could be an issue, it's a risk to the market.
Mm-hmm.
You know, I maintain my Mike Butler based position, but it does. But again, if you're looking for risks, Trump could do something crazy. That's a risk to the market. Inflation and inflation data regarding inflation can be that's a big number. Then you're going to have a September CPI, September PPI. Like you're going to get some readings here that may make it harder to be as comfortable as Mike Butler and I are with the situation. Although we also might take advantage of any sell-offs triggered by a hotter than expected PCE to acquire more high value securities in the U.S. financial markets.
Couldn't agree more. And yeah, SPX implied volatility is highest, except for tomorrow, or aside from tomorrow. The implied volatility is highest around that August 28th, 29th time frame. Which
you got
is
NVIDIA, you got some of the PCE numbers,
Yep. So that's when it'll be Friday morning PCE. So the market's pricing in some potential volatility too.
Number two, you have AI company profit warnings. You had a little bit of that over the last 48 hours or so. Vanetta actually talked about it this morning on Daily Dose of kind of the 95% of the companies using some sort of AI not really seeing return on their investment here. I am in the boat of it being, early days, and of course, it's going to take time for this stuff to get leaner and more cost effective and all that. But you think this is what is one of the bigger risks, is this just not panning out?
I think it's the second. I think the reason the market is as robust as it is, the reason the market's as indifferent to things like Trump or inflation or jobs, is because of the incredible strength of both the sort of direct line AI companies, meaning NVIDIA, Microsoft, Meta, those names that are sort of really driving it. And so the degree to which you get more, I forget the secondary aspect of the implementation not yielding results. I'm just saying the degree to which you get more Sam Altman style commentary that this thing's awesome, but it's not as awesome as the prices are suggesting. Like if Satya Nadella was to come out and say, listen, this thing's awesome and it's working, but you people have lost your minds. Like you need to calm down. Like that would be a big problem for the stock market, like more than Sam Altman. Or for that matter, basically, I would say the two biggest names that I think could really do some damage, and I don't think they're going to. I'm just saying this is why I call it the second biggest risk, just because it's what is the rally built on? The rally is built on the certainty of the AI transition, and transience of the relative indifference to the economic data. And so if you start to knock on the confidence in AI by virtue of, I would say, either the Microsoft CEO or the Facebook CEO coming out and saying, calm down. Or that would be a real problem. I believe that would cause you get an honest to God, old school sell-off. If you much more than even Sam Altman saying whatever he said, like, I would say that, either it would be Jensen Huang, the NVIDIA CEO, the Microsoft CEO, and the Facebook CEO, and even more probably Microsoft and NVIDIA. If any of those three CEOs was to come out and say, listen, it's great, it's amazing, but it's not that amazing. Like people need to calm down. Like that would be that's a big risk. That would cause a real big boy sell off.
I agree with that. I mean, Vanetta's news gave us a little bit of that headline. There was a little talk of Meta. They were $100 million here and there for every one of their new AI employees. They're kind of stopping that hiring at that level. Do you think that's the first shoe to drop? Like, is that the first one? Is Meta,
I don't even think it's going to happen. Just
kind of a scale back?
I don't think it's going to. I don't think it's what's going to. Again, the assignment was to identify what I believe are the four biggest risks.
No, I know. I'm saying,
I don't think they're going to do that.
You don't think so? That's just kind of.
But it's a big risk. I mean, if it happens, that's going to be that'll give you a sell off. Like I said, I think the odds that happen are very low, because I think that they demand. I think that the AI thing there's two discussions. Is AI valuable in implementation across enterprise and every business in the world, which is the jury is out on that very much, right? And then there's the value of the companies that are at the center point of AI compute, whether it's, secondary data interpretation or consumer facing UI implementation or back end, engine room chips and electricity and all that. And for that center pillar of AI implementation, from user interface to engine room and everything in between, I believe that the momentum on that in terms of the rate of change, and I actually think it's probably higher than what's going on. I think everybody's like, oh, it's going to be 5 to 10 years and then we'll see. I think it could be 1 to 2 years. I think we underestimate how quickly technology changes. And this goes back to a conversation that Tom and I've had a million times, and also Tony and I've had a number of times, having had the benefit of being the floor reporter on the New York Stock Exchange before it went to digital markets for 2 years. And then being I basically was on the floor of the New York Stock Exchange for 4 years of my career. The first 2 years were pre-digital, pre-decimal, fraction, eighths, quarters, all the sort of old school things.
Yeah.
And then was there, the months and days leading up to, oh my God, Monday's the day they're going to flip the switch. We're going all electronic, blah, blah, blah. And I was in the meetings, the briefings with Dick Grasso and all the people that were running the place at the time. I forget who ran the exchange after Dick, but, and it was, oh, this will take a few years and all this jazz. And I don't know, don't quote me on the number, but my sense on day one, that first Monday morning, because they obviously ran it as a paper trade over the weekends, like where they would basically take over the 6 months before they did the implementation of the electronics. They would use the weekends to run a paper trade on it to make sure the whole thing didn't blow up. So that by the time they actually ran real money through the pipes, it was a functioning system, which it was, and they did a great job with that. But I from my sense, was 60 to 70% of the volume on day one went through the electric pipes immediately.
Yeah.
And I did, or it's like when a currency, when the British pound go, like when it's like nothing, everything. And I just think that AI is more in that space. So when people talk about a 5 to 10 year time horizon, it doesn't make sense to me. I think we're in a 1 to 2 year time horizon.
Yeah.
And I think that that's actually, there's all sorts of issues with that having to do with social disruption and what are we going to do for jobs? There's going to be all kinds of social aspects of that are really going to become much more central, I think, much more quickly. But from an investment and financial standpoint, I'm not afraid of the valuations on Microsoft or NVIDIA or Meta or whatever, because I believe people are still looking at these 3 to 5 year time horizons. And I believe we're in a 1 to 2 year time horizon.
Yeah, I mean, technology moves so much faster now than even 10 or 20 years ago that it's an exponential movement, and I totally see that happening. I totally agree.
It's not just that the technology moves faster, like people adjust their behavior. I mean, I'd be so interested to look at the number of people that are using Google search right now compared to 2 years ago, and how many people that maybe they don't use ChatGPT or Claude or whatever to do sophisticated planning to do a startup. You can make $1 billion with 10 AI employees by yourself as a startup. Like, I'm just talking about people who use ChatGPT as an app on their phone as a replacement for Google search.
Yeah.
Are you one of those people, Dylan?
Huge number. Yeah, I haven't used. I am that person. I mean, I use GPT a little bit more than that. I use GPT as my Google search.
Yeah.
And then I also use it for contract drafts for my businesses that then to make it easier for my lawyers, I basically I do a voice note to ChatGPT. It spins up a contract that's inevitably wrong. And then I give it notes, but it's better than nothing. And then I give it amendments, and it modifies itself. And then whatever the draft ends up being, I then send to my actual lawyer, who then marks it up. But it makes my legal bills lower, and it makes my lawyer's workload lighter. But I think that's still, I'm probably, that's very junior varsity level. Like, I'm probably still level 1 or 1.5 GPT user, because I'm just doing it, like, as I said, as a Google search and some contract drafting, basically.
People in the YouTube chat are calling for Dylan GPT. They want you as their AI bot.
Listen, send it.
Or your voice. You could start contracting your voice out to ChatGPT. Didn't what's her name, like Scarlett Johansson? Didn't she sue them for something? She sued one of them for like using, they changed like one octave in her voice.
Yeah.
And we're using it as like one of the, like voices that you could have enabled.
Naturally.
And she got a big payday out of that. So maybe there's a space for a Dylan Radigan chat voiceover for ChatGPT.
I like your creativity and your thinking. I think the obvious thing we need to do is we need to ask ChatGPT how we do this. We need to say to ChatGPT, I am Dylan Radigan and I have a very nice voice. And I would like to use that voice to make money by selling it to ChatGPT. What do you recommend? And then I'll say, and then we'll get a draft, and then I'll send that draft to my agent, Mike Butler. And you can call Mike Butler and he'll take his 10 points and we'll catch you in Bora Bora.
Hey Dylan, as long as you let me be the help on the side there, I'm all in.
You're way more than help. You're my advance man. Somebody's got to get to Bora Bora first and get things set up.
That's true. That's true. I could call some of my relatives for help with that. The last one we've got is no September rate cut. So we've been talking about this a little bit. You've had a little bit of hot numbers from PMI. You have PCE next week. You've had the employment numbers kind of be all over the place. You have the rate projections kind of coming down over the last week. Last week, they were basically 100%, 98, 99%. They're now in the mid 70s right now.
Yeah.
You think this is the risk if there is one?
No question. I mean, I think this is probably, I don't think this is going to happen. But if you're saying what are the 4 biggest risks, by far, no rate cut in September is going to be a big ass problem. Yeah. I think we're going to get the rate cut, but if you're asking me what could make this beautiful stock market get squirrely, the other 2 things, PCE, the inflation number, or the Trump wild card, like my risk 3 and 4 are kind of just completing the list. Yeah. I would actually say there are 2 real risks to the market right now. One would be consequential negative rhetoric from an AI CEO of consequence, meaning Microsoft, Nvidia, Meta, et cetera. That would be a real problem. Mm-hmm. And then no rate cut is going to be a real problem. Now, you could argue, well, PCE or CPI or the jobs number or Jackson Hole are opportunities for signals to be sent that indicate no rate cut. So therefore, you could get a no rate cut sell-off before you don't get a rate cut because you get some big signal ahead of it. But anyway, between September 7th, like if you want to have a bad fall in the stock, if you want to get like sort of the whole September, October misery thing that sometimes kicks up in the U.S. stock market. Yeah. The thing that'll make that happen is if the Federal Reserve is says never mind.
Yeah. So does Jay Powell fall in line, or is it really because the numbers justify it?
I don't know. I mean, let me put it this way. I don't think Jay Powell falls in line. I think Jay Powell is pretty confident in the sense that he'll do what he thinks is the right decision. I don't think Jay Powell is afraid of Donald Trump at all. I think that if he makes a rate cut, he'll make a rate cut because the Board of Governors of the Federal Reserve advised him collectively to make the rate cut based on the best data that they have at the time in the central bank. I think if they don't make a rate cut, they won't make a rate cut because they believe it's a valid decision for the same reason. He talked to his Board of Governors, they evaluated all the data, and they made a collective decision. But I don't believe that the decision we made in the boardroom based on the data and on the advice of the Board of Governors, not based on rhetoric from anybody, including the President of the United States.
I like it. Yeah, the probability of a rate cut's been falling steeply. It's down another 2% from this morning. Wow. Mm-hmm. So yeah, we will see what happens. But for tomorrow, for the Jackson Hole Summit, there actually is a lot of implied volatility priced into the E-minis. You have a 55-point expected move for tomorrow, which is significantly more than what we're seeing today. So
if you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.